Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, markets are not impressed with positive economic data, rather seeing rising problems ahead. US retail sales bounced back in June by a bit more than expected and boosted by car buying. They're up 2.3% compared with the same month a year ago, making back a little of the 7% equivalent drop in May. For the first 6 months of 2020, they're still 3.4% lower on a year-on-year basis, and that is a loss of $102 billion of retail impulse. But that may be the best it gets with lockdowns and restrictions on the rise in their pandemic fight. Last week's American new jobless claims were 1.5 million at the expected level. There are now more than 17.5 million people on this support, or 12% of their workforce. In the next few months, this will start tailing off as benefits for early claimants expire. In China's house prices rose 4.9% in June, the same rate as for May, and much of the impetus is coming from major second-tier cities. It is a trend Beijing's loose monetary policies fed, but they didn't really want the investment to leak into high-rise property. They're scrambling to undo what could become a dangerous bubble. It is a bubble that's been recently estimated at a massive $52 trillion. Retail sales fell 1.8% year-on-year in China in June, which is a result worse than the small gain expected. And it's just miles lower than the 10% gain China recorded for retail sales growth in June 2019. Electricity production, which is an often watched metric of China's real economic activity, was up 6.5% in June from the same month a year ago, and it's a fast-rising trend and the fastest growth in more than a year. All this rush of data is in support of their second quarter GDP result, which claims growth of 3.2% and better than the 2.5% expected. It is certainly a solid recovery from the first quarter decline of 6.8%. But it's not quite the V recovery they're claiming, and that'll have to wait till the third quarter. In Australia, there are almost 1 million people there unemployed, worse by 274,000 in a year. And that is despite its biggest monthly bounce back in jobs since records were kept. However, it wasn't enough to stop the unemployment rate rising to 7.4%. Their rise in employment was dominated by 249,000 part-time jobs, while full-time work fell 38,000. But the true picture is much worse, with joblessness that would be over 13% without the government subsidy programs. The US Treasury 10-year yield is 2 basis points softer at 0.61%. The gold price is down $17 today at $1,795 an ounce. And oil prices are a little softer as well. They're now just under $41 a barrel in the US, and the international price is just on $43.50 a barrel. And the Kiwi dollar is softer as well by nearly half a cent to 65.3 US cents. A little changed at 93.7 Australian cents. But against the euro, we've slipped slightly to 57.4 euro cents. That means our trade-weighted index is down to 69.8, but that's just where it was 2 weeks ago. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.